Good morning, everyone, and welcome to the Daily Trader with Kevin Hincks. I'm Kevin Hincks. I have two paper money trades for you today in stocks that are busy and active and related in a way. We'll look at Tesla grinding to new all-time highs based on today's CPI data, and Rivian, a company with some heavy investments and a stock that has rallied pretty significantly over the last couple of weeks. So let's take a look at it. First, we'll look at Tesla. Now, Tesla, the all-time post-split high for Tesla is $409.97. As we sit at 9:30 Chicago time today, the stock is trading over $410.50. So if it closes above $409.97, let's round to $410. Tesla will close at a new all-time post-split high today. So everything that's been going on with Elon Musk and the election and the potential for EV tax credits to go away and what's going to happen for less possible regulations with full self-driving, robo-taxis, robotics, all those parts, and as well as energy and energy storage and charging and all the different aspects of Elon Musk's business. Tesla now grinding to new all-time highs, and incredible on today's CPI data that came in line and gave what I feel the Fed is a big green light for December 18th Fed meeting to lower by 25 basis points. Now, so what do we do with Tesla sitting at all-time highs? Well, you can play bullish, you can play bearish, or in this case, you can play for both movement. And so the paper money trade I looked at in Tesla today is the long iron condor. You're going to see similarities in both trades today, and I'm going to show you what they are. Two different ways you're going to see on this little podcast to play movement in stocks. The first one, the long iron condor. That's where you buy a call vertical and buy a put vertical. So I went out to the December 27th expiration. The expected move during that period, $43 in either direction, plus or minus, based on the implied volatility of around 62% in aggregate. Now, looking at the chart, buying the 425, 435 call vertical, buying the 380, 370 put vertical, doing that for a debit of, I've got it up there for $5.25. It's trading really close to $5.25. Now, what does this give you? Where does this lose money? The risk is the debit paid on this spread. The risk, where you see that dip there in the profit graph, it's anything in between those strikes, right? You're looking for a move outside of the strikes towards $435 on the upside, towards $370 on the upside. The break evens are the 425 plus 5.25, so 430 and a quarter. The break evens on the downside, 380 minus the 525, so about 379.75 is where you would break even on the downside. And like I said, you're looking, this is a $5 debit, 5.25 debit. You're looking to go at or near $10 in either direction. That's the great thing about an iron condor. You don't care which direction it goes, as long as it goes through your long strike, which is the 425 and call and the 380 put, and towards the short strikes. So a $10 long iron condor. Again, the risk is that nothing happens and the stock doesn't move towards those strikes, and you have risk of $525 between now and December 27th. So if you think Tesla's going to move, has the possibility, but you don't have to know which direction, this might be a trade for you. If you don't think that could happen, if the markets could slow down, the markets could consolidate, this wouldn't be the spread for you because you're looking for a move outside of those strikes. Okay, there's our first trade. Now, the second trade of the day is the other EV company, and that is Rivian Motors. Now, Rivian Automotive. Sorry, not Rivian Motors. So, Rivian, on December 9th, it rallied 11.2% on news of a partnership with Volkswagen. They put $5.78 billion investment into Rivian. Also a bullish rating by Benchmark helped move this stock higher. You can see the chart there. It's been, gapping to higher levels. A $6.6 billion loan from the U.S. Department of Energy to help to build their Georgia plant. So this is a company still in doubt, but moving down the path. I think the Volkswagen investment was a big vote of confidence. The problem with Rivian right now is they need to up production because right now they lose money every car they sell. Well, the question is, how can they do that for more? Well, the more you sell, those numbers will change and you'll get profitability. You need production to gain profitability. More cars, more sales. So that's what they need. They're still losing money per vehicle. They need more production, more sales. The numbers have to get bigger for them to get profitable. Their costs are high. They still have competitive pressures in the EV market from China, from Tesla. But all things considered, this looks like a company that has the staying power based on loans from the U.S. Department of Energy, based on an investment from Volkswagen. So now let's get to our Rivian trade. So this is called a back ratio trade, which means we went in again, same expiration, Dec 27th. I went in with the stock trading $13.30. I went in and sold the Dec 27.10 call and then went out to the Dec 27.14 call and bought two of those. So it's the 1/2 back ratio spread in Rivian that we're looking at here. So again, where does this spread lose its max loss? At the $14 strike. If it goes to that $14 strike, it's where the $10 strike will be worth $4 and the $14 strike will be worth $0. So where does it break even? Well, $12.15. If you sell it for about $2.15 credit, it's trading about a dime more than that now, maybe $2.20, $2.25. So that would help the break even. Based on the credit that we took in, $2.15, the break even would be $12.15 on the downside. Remember, on a back ratio, if it goes to $10, the credit that you took in, the $2.20, $2.30 on this trade, $2.15, would go to $0. And you'd make your credit on the downside. On the upside is where it gets interesting because the upside is infinity, right? Because you're long an extra call on this. So where does it lose the most money? $14. You got to get through that break even at higher levels. But on the upside, there's infinity how much you can make because you're long an extra call. You're short a call vertical, the 10-14, long an extra 14 call against it. So these are two spreads, the long iron condor in Tesla, the back ratio, 1/2 back ratio in Rivian Automotive, both playing for big moves in either direction. Two ways to do it, though. That's what we showed you on today's podcast. So that's our show for today. Have a great day, everybody, trading Tesla and trading Rivian. See you tomorrow on another edition of Daily Trader. I'm Kevin Hincks.